My bad. What's going on, everyone? Happy Friday. Happy Forest Day. And welcome back to Sin City Crypto Live. I am your co-host, David. And we're coming at you from a studio here in, what the hell is this, fog? It's not fog. It's actually very hazardous air, Las Vegas, Nevada, with our daily, only on the weekdays, live shows. Before we get into the content, quick disclaimer, nothing that anyone says on this channel should be taken as financial advice. So please, as always, do your own research. Also, the thumbnails should not be taken as financial advice either. Speaking of content, today, of course, it's Friday, so we have our main man, Forrest, the founder of Cryptostackers, joining us today to talk everything Bitcoin, Ethereum, markets, where are we headed, where are we going, where we're not headed, all the fun stuff. Also, Queen passed away yesterday, rest her soul, and today, the crypto degens are out and about, pump and dumps everywhere, meme tokens, NFTs, we'll talk about that. And also, I'd like to introduce you to your other co-host, Big Rob.
Hola! It's yo boy, Big Rob, back in the house. Welcome to Sin City Crypto. First time checking us out. We are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information, and we package it up in a fun and sexy way. Also, here at Sin City Crypto, we don't just do live streams. We also do deep dives and cover other projects. We're active on social media, and we do YouTube Shorts. So make sure you check out all of those handles down below.
Also, Robin is short.
Not short. 5'10". I'm an average sized man. Actually, above average. What's the average size for height here? 5'8" for a male?
Nah, 6'2".
Get out of here. All right. So
comment your height in the chat.
5'10", bro. 5'10".
All right,
Thank you.
Go ahead. Sorry.
Now let's get right into the roll
juiced up. I am juiced up today, man.
Good.
Okay, what was the sergeant's name again in the movie?
I don't know.
Sergeant Slaughter?
Sergeant Slaughter. No, definitely not. Okay, so we got Jason first up in the chat. Round of applause for Jason. That's right. Now we also got Robert Salazar, Broke Yoshi. Well, David, what is wrong with you today, bro?
I am on one today. I didn't get any sleep last night. So when I become delirious, I'm extra funny. So you're welcome. Continue.
It's debatable on the funny thing. Yeah.
Are you guys having phone calls without
I don't
me?
know what's more.
The thing is that we don't need even to call each other for that one.
Fucked up.
Yeah, I don't know what's more dusty right now, the personality or the weather outside here in Vegas. All right, so we got Robert Salazar,
Something
Broke
else came to
Yoshi,
mind.
Fino, Brian Hamilton. My true love is back. Welcome back, true love. And then we got Noel is back here as well. Nordy, Marky Mark, Jimmy, and we got
Jimmy's been a lifesaver for us, by the way.
Yeah,
Jimmy,
man.
we can't thank you enough. All the time you spent with us over the last couple of days.
and then Mervin Salvatore Militiello. And then we got
That was the worst Italian accent. Salvatore Militello.
Oh, this one is good.
Thank you, Rocco.
I was kidding.
Oh,
he was patting himself on the back. He was like,
As you can see off
thanks,
camera.
man.
yeah. They don't need to see that.
All right, all right. And then what else we got? Mervin, Big Chili Willie. And then Sean Burns, Hindi, Terry K, Luis Rivera, and who else? We got Crypto 420, Cito. We got Olive Oil in here, and then
What is
we had
it?
somebody
I
new in
didn't see
here.
this one.
Gabor.
Oliver, yeah.
Gabor Palifi.
And then Gabor Palifi. He's new here.
Yes.
Gabor. Hola! Welcome to Sin City
He
Crypto.
said, bull market back. Are you okay? I said, no, please send help.
And he's probably already left the stream. Gabor, if you're still here, say what's up.
Yeah.
And then do we got anybody else new? That was it, right?
Say my friend Sean Burns, anime.
Sean Burns,
Big
anime.
D's back.
Big D, Hindi, Luis, Redman. I think that rounds it out.
Yes.
Also, there was a request for the like sign, which I did fix. It does no longer flop around. But yeah, so the like sign is in full effect. So make sure you hit the like button.
You know, at least
Subscribe.
someone appreciated my Italian. Salvatore, thank you, my friend. We can count on you. All right, I don't want to waste any time.
¿Qué pasó?
This is from the Fred. Not Fred Flintstone and not your neighbor Fred, but the Federal Reserve Department. This is the 10-year Treasury maturity minus the 2-year Treasury constant. And you can see anytime it dips below zero, going back to 1987, 88, 2000, 2001, of course, 2007, 2008. And then on the far right is where we are now. So this is essentially the yield curve inversion. Robin, have we been in a bear market since essentially 2021?
20, yeah. Well, it depends on when in 2021 because we were in a bull market most of 2020, man. We've been in a. To answer your question, no. 2021 was a bull market because the height of the market was January of 2022. So all the way through 2021, bullish.
Okay. Oh, shoot. Sorry. Press the wrong button. My bad. All right. And I want to show, I pulled up this on TradingView and it looks like, my idea is not working. I had a chart on TradingView that I was going to show. Damn it. Such a good chart too. All right. Whatever. Take a look at the crypto markets. Damn it.
All right. Taking a look at the crypto markets. You just end task. And, all right. Taking a look. Bitcoin is at $21,323. Gigantic rally over the last 24 hours. We went all the way from 18.9, 18.8, 18.6, all the way up to 21,300. You know what that means, right? The bull market is back, baby. Let's go. Yeah. That's right.
Oh, God.
Feels good. Feels good when here's the thing. When I look like a dumbass doing that, just know that the crypto prices are rallying. And when the crypto prices are rallying, everybody's happy.
We found the correlation.
That's right. It also happens to be that Las Vegas was covered in a zero visibility dust storm last night. At the precise moment that Bitcoin started rallying and crossed the 20K mark. Did you find that a coincidence? I saw the Return of the Mummy movie, and when those big dust clouds come in, big shifts in the movie, right? That's when things really turn upside down. But to look at the markets,
21.2, baby.
So
what's the volume looking like? Scroll up a little bit. All the way up.
All right, we got
54.
54 billion is not too bad. And Ethereum is also rallying over $1,700. So nice movement on Ethereum, which is surprising that Bitcoin is outgaining Ethereum right now with the merge coming up. Bitcoin is up over 10%. That is absolutely crazy, right? I mean, let's see.
I wonder why.
Terra Luna is up 200%.
Wait, the classic or the OG
no,
or the original scam or the new
regular
scam?
the regular scam, the new scam.
Gotcha.
New scam up. So Terra Luna up. It went from $1.90. God damn. And so it went from $2 to $6.
Guys, don't.
This right here is what they call artificial growth. When you have nothing on the radar and you're known for being a trash project and you have no volume and then kaboom, you just straight moonshot here with no actual news to back it up. Unless I'm missing something. Was there any news on Terra Luna?
Not that I found.
Yeah, not that we really care anyways.
Yeah.
Another insight there.
I got my laptop working, by the way. So I asked you that question for a reason. I said, Rob, you think we've been in the bear market since 2021? And so I went back and then I took those points I showed you on the chart earlier, and I decided to plot them on this on my TradingView app or TradingView. So if we go back here to 1987, 1988, This was essentially a recession, and just to measure the move here from the top, we're looking at about a 45% move. And then we move over to 2000/2001, where that with a 2-year across the 10-year, and you're looking at 52%. If we go to 2008 and we measure it from top to bottom, you are looking at 55, closer to 60%. And where are we now? Okay. If you see, this started trending downwards since the end. December, this is a monthly chart, by the way. December of last year. And if you measure from December of last year to where we are now, we're at negative 18%, to where we were at the lowest.
You need to renew your antivirus.
You're looking at, so from top to where we bottomed, this is back in June of this year, you're looking at 25%, to where we are now, 18%. So you still think the recession wasn't kind of triggered already, kind of starting to get there the end of last year? It's history, bro. The numbers.
When is the peak? Exactly.
The peak was December 2021. This is a monthly chart.
So you're trying to say that halfway through December is considered 2021?
Kind of. I mean, technically.
So
technically, yes.
So okay. So I'll rephrase this. When you asked me if we were in the start of the bear market, the start of the bear market started 11 months and 3 weeks into 2021. Is that what you wanted to hear, David?
Thank you, Robin.
You're welcome.
No,
So-
just something interesting. And that yield, the 2 to 10 year, hasn't been that low since 2000. They didn't even get that low in 2008. So the biggest problem now is that inflation is so high they can't print any money. They can't inject any money. They can't prop up the stock market, and they can't essentially aid the recession reversal. So where we headed, no one knows. Curious to see what Forrest thinks about that.
You know, I am still on this bullish
Get
Ethereum
outta
Classic
here.
news. I'm telling you, I am, me personally, not financial advice, and I probably wouldn't recommend following this one,
Do not.
even if you decide to break the financial advice rules. I'm getting into Ethereum.
You're getting into Ethereum Classic.
Yeah. I could see $60 Ethereum Classic within 2 weeks. I think it's...
You know what? I'm going to dump 10 grand into it, Robin. If I lose, you're going to pay me half back?
Do not take anything I say as financial advice. Thank you. That's what I got. But taking a look at the Crypto Fear and Greed Index, we are at a 22. So sentiment is starting to ease up in the markets. And
I'm surprised we didn't dip under 20, to be honest with you.
we only
Yesterday.
got to 20.
No, like under, like in the teens.
And then taking a look at the crypto bubbles,
God, I
we
hate
got
seeing that name.
the regular Luna up 20 or 200%, Luna Classic down 14%, Raven Coin up 42%.
What does Raven Coin do? I know it's proof of work.
I'm not exactly sure.
I'm not sure either. What does Raven Coin do? Let us know in the chat.
I'm not even gonna speculate.
Do they breed ravens?
They are proof of work, so that's why I'm in this ETH Classic kind of ideology, because graphic cards are switching over to Raven Coin. So I think Ethereum Classics prime to take off. And then I forgot to pull up the traditional markets here. And
Last time I looked, the Nasdaq, everything was in the green.
yeah, Nasdaq up 2%. So in the next couple weeks, we're gonna really see how everything shapes up. I do think that I think we might be ready for another bounce in the traditional markets. I think going into, because next month is the midterm election.
November is 2 months, month and a half.
Month and a half. So anyway, here around the corner, we got the midterm elections, and you also have holiday shopping. Supply chain constrictions are easing. The one thing that's really holding back the economy from kind of gearing back up is is the food and energy prices. A lot of that is still stemming from the conflict in Ukraine. But outside of that, the price of goods themselves, like tech and computer chips, that is starting to normalize. Commodities are starting to normalize. Copper is down 20% from a year ago. Gold is down 10%. Lumber is down significantly as well, which was one of the constraints that was affecting infrastructure as far as building homes and new construction. And so, we're not far away from having a rally. And I do think that I would be careful in assuming that we're going to just have this big bounce and bull market's going to come back, at least in the legacy finance. But I don't know, man. I don't think there's going to be too much more downside in the immediate 6 weeks, I would say.
Yeah.
Because I think the inflation numbers are going to come down again. I think we're going to be under 8%. I think the forecast is 7.9, right?
7.5.
7.5?
Full 1%.
Oh, wow. So in the event, and it is starting to look that direction, in the event that, say, we're below the expectations, say we come in at 7.1, which is still straight trash as far as where you want to be.
But
at.
it's pretty
being
trash.
realistic. But
the trash is in a better trash bag.
And so, the only thing that's kind of got everybody uneasy is also, so you got the food and energy prices, and then you have the coming interest rate hikes. So probably another 0.75.
By the way, speaking of interest rate hikes, the Fed governor, it's either Waller or Wallen, he pretty much said, I will vote for a significant rate hike in September. Now, of course, he's one of many people that get to vote in the FOMC. He's the governor of the Fed, and so I'm sure he's got a lot of sway with the other members. Time will tell. Will we see more than... So I think 75 is priced into the market. Could we see 100? Rob, can we see 100? Could we see 100?
No, I don't think so.
No?
So you get the 75, and then you have no Fed meeting in October. So the next one will be in November.
A lot of vacations.
Yeah. Oh, they got to take off for Halloween.
You hear that?
What's that?
You hear that? Forest, forest, forest. You hear the forest chant?
I heard it.
Good job.
Let's go.
Let's go. Forest. Let's bring him on. The man, the myth, the legend.
Guys?
What's up, Forrest?
Not much.
Doing, man?
Just pretty decent day for the portfolio. Nice little bounce off the bottom there.
I was watching your live stream today, man. That was pretty good. I'm gonna have to join that Discord. Like, what? What are they doing in the Discord?
Yeah.
That's amazing. Forrest, thank you so much again for joining us.
We'll get you in there.
Oh, for sure. Did you catch the beginning of the show? Not sure exactly.
Didn't.
Okay, so I want to show you this, and I kind of want to get your opinion. So this is from the Fed. This is the 10-year Treasury constant minus the 2-year. And anytime it crosses below zero, it is essentially led to a recession. 88, 2000, 2001, 2008. We haven't, then on the far right is where we're at currently. We haven't been this low since 2000, 2001, which we saw drawdowns of over 55% in the S&P 500. Now, this number, this is not an interactive chart where I have it, but it points to the end of 2021. So have we essentially been in a kind of a semi-recession, or at least the beginnings of one, towards the end of last year, based off of this, and then looking at, where the S&P is drawn down?
I'm trying to pull up this chart as well on my end, but I think I just butchered it. USO2 year, is that it? Hopefully. Well, because it's a very similar chart. And if I get, there we go. And I pull this up on the weekly. And then what I'm trying to do is overlay this the exact same thing that you have, the yield curve, with the S&P 500, so people can see the at S&P 500.
I did it the hard way. I did them separately.
New price scale. There we go. We got it. I'm going to share my screen already here in just a second because I've got this pulled up. And yeah, I was literally just looking at this the other day. Let me share my screen here. Boom. All right. Do you guys see this now?
Yep.
All right, so this is the yield curve. It's the exact same chart, I believe, that you just had it here. It's the 10-year minus the 2-year. And if we draw a horizontal line at where that inverts or basically goes negative, right? You can see, the black lines are essentially the 10-year minus the 2-year, the yield curve. And then the orange line here is the S&P 500. So what happens is you dip below it, yield curve inverts, causes a recession. Dip below it, yield curve inverts, causes a recession. Last time we were kind of flirting with this. We didn't quite, we inverted for a very brief period of time, and then we got the COVID panic, and we printed our way out of it. But if you go back to the early 90s here, we do have one example where we went negative, and we just got a little blip, and then kept going up. It's dicey. It's very scary. And especially because the last couple times we've seen this, other than this little kind of blip here where we briefly went under it, but anytime we've gone this far below it, we've gotten that recession, but it's occurred, or the bulk of the drop has occurred after the yield curve has started to recover already, and we haven't started to recover yet.
Right.
So we could be, September of next year before we start to see this, maybe 6 to 12 months from now when we start to see this recovering, and maybe we get this little blip and then it falls off a cliff. I think it's a Peter Thiel quote. Oh, go ahead.
I'm looking at the 2000 there, where you get kind of like a bounce, and then it retraces back down. And so, maybe that's something that happens. And, a lot of this, you got to think, like what's behind the S&P 500 being lagging. And I think a lot of it comes from quarterly profits and then valuations of the company. So that's essentially, outside of what, traders are moving prices. Realistically, the market will move by profits and valuation. And those coming up, I think with the interest rate hikes that we've had and the slowdown in the economy, I think we're going to start seeing that in the here in the near term. So,
were you going to say something about Peter Schiff?
I think it's Peter Thiel, but I could be misattributing the quote. He says, more money is lost trying to time or prepare for a recession than is actually lost in the recession itself. In that, like, everybody's been talking about a recession, since the beginning of the year for the last 9 months. And yeah, it's been a great time to have your money out of the market. But everyone's still worried about a deeper crash, a deeper recession. But at the end of the day, I mean, the government could potentially, rev up the printer again and put off a recession for, by 6 to 12 more months. We don't know exactly what's going to happen. There's so many factors and variables that go into this, and we're in a situation where it's very different than it was in 2008 and 2000. We just have our own different set of problems in the world right now than we did in 2008 or the dot-com bubble. So it's difficult to predict these things, and it's even more difficult to time them. So it could be a situation where we go back up to all-time highs in S&P 500, start printing into the 5s and 6,000s, and then a year or two from now we get an absolute horrible crash. It's all about, I mean, at the end of the day, the government doesn't want, to crash the economy. So they're going to be trying to kick the can down the road as far as they can. But maybe they kick it down the road for another year. It's difficult to predict.
Can I make the argument that would actually be a good thing? If we do see this, if we're not in the midst of a massive drawdown, if we do wait another year and a half, 2 years, supply chain issues might be fixed, inflation might be lower. And so at that point, when it does crash, they might be able to pump more money into the market. Can someone make that argument?
I don't see anything wrong with it. It would also be coinciding with potentially the next market cycle for crypto, and potentially position crypto as a more viable lifeboat than fiat. But who knows? Yeah, it's tough. It's really tough to tell. It's it's even more difficult to time them.
My concern is that if we do go deeper into a recession and Wall Street in particular and equities hit very hard and drop, and there's this panic and everyone's just kind of consensus that we're in a recession. If this happens sooner than later, the Fed is kind of out of ammunition. I think they could stop raising interest rates, but right now their whole mission is to get the inflation down to 2%. And I just don't see them going back on their interest rate until they're at least closer to that. And, if it on the short term, I'm just a little worried if market runs out of steam. Yeah.
We'll see.
Right. Yeah. I mean, look, there's not a lot of there's not a lot of solutions out there. The two that I can think of is don't print so much money in the first place, slow down government spending, and energy independence. Like if we nail down those three things, it's a little bit more difficult to screw up. But we've been doing the opposite of all those three things.
You should run for Fed chair. I feel like that's something no one else apparently hasn't thought about or thought was a good idea. So I'm just like, everything you said is so right, and it sounds so simple, yet it's like, okay, if you're going to print the money, at least start slowly raising the interest rates to kind of balance it up. But they did the opposite. They left them at zero, even dropped them lower. Well, when it was at like 0.25, it left them at zero and then started printing money.
I think a lot of it also comes with the fact that there's a lack of education when it comes to the monetary system that we have in the general public. So I think most people in this country and around the world are oblivious to what politicians are doing to manipulate the financial system and for their own personal gain, for re-election, and for their own party's interest. And I think if people were more aware, they would stand up and push back against the policies. But I don't see that changing anytime soon. And so anytime there's a problem, the government just simply throws money at it to fix it. And at the cost of inflation and at people's hard-earned money in Texas. So.
Forrest, I want to pivot. Unlike the Fed, did you obviously the White House released their paper on the energy crisis and crypto and Bitcoin?
Did you see that? Did you read that or hear about it? The White House paper?
What was it like? Proposing Bitcoin proof of stake or something?
So all right,
Bitcoin bad.
I have a video. So Charles Hoskinson, he kind of broke down a segment for us, and I would like to share that video, and then after we come out, we'll discuss it. All right. So
sweet.
Here we go. And then I just have to scroll to the part that I found.
That lobster kills me.
The lobster. Yeah.
What are you doing?
Rocco, we have audio? Well, it's playing right now. I don't hear anything. You know what? Maybe when I reset the computer, it doesn't automatically take the speakers to the audio thing. I can check that. Yeah, go to Robin. There you go.
Oh, it's on me. Hey. Yeah, why don't we do this on the back half, and then
right here.
we can look at. Are you good?
Yep, we're good. Give me 2 seconds. Oh, we're here. Okay.
Yeah, it should send audio. I think you're probably just muted. Sound is.
All right, Rocco, let's try it one more time, all right?
Yep.
Nope. All right, all right, so we'll come back to this video. But essentially, it's saying, hey, Bitcoin, you don't stop using, if you don't start reducing your energy usage, we might file an executive order to either completely ban or restrict mining. So we know how hard it is to get anything passed when it comes to crypto and Bitcoin. What do you think as far as the miners passing proposals? Do you think this is something that they're going to be like, all right, look, we have to try to either speed this thing up or figure something else out? Do you see anything like that happening for us?
Yeah, it's tough. So I've been saying for a while, I think there's going to be a Bitcoin proof of stake fork. It's in Bitcoin's future at some point. I think it's inevitable, and I think it will split the community into two camps. You maybe have like this government / institutionally accepted Bitcoin proof of stake. And then, that obviously will not be accepted among Bitcoin maximalists and Bitcoin proof of work or proof of work, consensus mechanism maximalists. But I do think it's inevitable in one way or the other, whether it's we get regulation that pushes, Bitcoin out if it doesn't switch to proof of stake, or it's just reflected in Bitcoin's price continually underperforming against, proof of stake cryptocurrencies, which is a prediction that I've made. Look, I pick on Bitcoin all the time for the inefficiencies and the energy use of Bitcoin or of proof of work, but I'm not a fan of regulating it away. That's not why I have an issue with it. Like, I don't have an issue with it from like an energy consumption standpoint or anything like that. It's more, my view on Bitcoin is simply one of competitive analysis and in terms of value leaks. I just personally think that, Ethereum is set to succeed when compared directly to Bitcoin because it's not going to have those value leaks after the merge. There are trade-offs that come with that. Some would argue that proof of work is significantly more secure in some ways. I would disagree with that, but there's strong arguments to be made, and I don't think we should be regulating just based off of the energy use in and of itself. I'm kind of pro Bitcoin and pro Bitcoin or pro crypto on this stance, anti-regulation, even though I am guilty of picking on Bitcoin for proof of work and having that value leak.
Yeah,
it comes from a different perspective than the regulators are coming from.
We were looking at it yesterday, and they basically plotted every year the energy consumption of the Bitcoin network, and it seems like every 4 to 5 years, so basically every bull cycle, the energy consumption has been growing by a factor of 10. And I'm in this camp that, the Bitcoin fanatics will tell you like, hey, it only uses 0.01 or 0.001% of energy. X amount of it is green. And I'm in this situation where I'm like, but if it grows by a factor of 10, I mean, what does this look like 20 years from now, after 5 more Bitcoin cycles, right? And if this prophecy that people have that Bitcoin is going to replace everything and is going to be the go-to and end all the crypto, which I mean I think is a fair thought. I think it could play out that way. I mean, it has stood the test of time, has the most market adoption, and layer 2s could fundamentally scale the project if you're okay with decentralization or with centralization. But what does the energy consumption look like when it grows by a factor of 10 for the course, every 4 years? I mean, you're talking about, 1%, 2%, 5% over the long term of energy globally. I just think it's unsustainable. And at the end of the day, software is supposed to evolve, and any technology that we use nowadays has upgraded and changed over time. And I think that there's going to be a moment, might not be a day, but it's going to be some kind of time or reference where people look over at Bitcoin. They're like, look, man, something has got to change here. And maybe it's what you said. Maybe it does fork and go to proof of stake and gets market adoption. Who knows?
Yeah, I'd be fine with proof of stake Bitcoin. Honestly, it'd probably make me like it more. I like proof of stake. I think it solves a lot of issues. Some would say at the expense of centralization, but again, you can counter argue that as well. But yeah, I agree with what you're saying.
And then I think we're seeing the biggest experiment or the biggest test is Ethereum going to proof of stake. And if you can look forward, say 6 years from now, and you can see the Ethereum network as just as decentralized, if not more, and just as secure, if not more, then what case can you make that proof of work is better? Because at that point, you're just expending unnecessary energy and accomplishing the same goal as someone else or another product that isn't expending as much energy, but yet is achieving the same goal there. So,
Interesting.
For sure.
It's all up to ETH. ETH is going to set the precedence. If everything goes off smoothly, you can see any other
or the exact opposite. If that thing, because if something were to catastrophically go wrong, some bug went through that we didn't realize, and there's merge is a very, very big undertaking. If something were to go wrong there, I mean, it'd probably set back proof of stake for 5 years or something crazy like that, right? I mean then proof of work fanatics would.
Time will tell.
Yeah.
All right, Forrest, we're handing this over to you, my friend. Do your thing.
Cool. Yeah, we'll take a look at some charts here. All right. So, yeah, I mean, the big kind of move today was in Bitcoin. Bitcoin, I think, pumped 8 to 10%. I think it might be falling back just a little bit. It's at 21.2. It's actually holding up pretty decently if on the Bitcoin chart here, slowing down a little bit. Some altcoins looking that like they're receding a little bit. If we look at altcoin market dominance, despite the negative price action that we had over the past 2 weeks, we're actually seeing altcoin dominance spike upwards, which is really weird for a bear market. And I think it's personally a signal that speaks to, hey, people are more comfortable in altcoins right now. People are comfortable in stuff like Ethereum, stuff like Cosmos, stuff that they're willing to hold for a very long period of time. I know I just picked 2 there, but there's plenty of other good cryptocurrencies out there that I do think people are comfortable holding, not just Bitcoin. We did have kind of this little bearish ascending wedge here that kind of poked out to the top, and we're coming back down to what is potentially a support level for altcoin dominance. It'll be interesting to see, because I think a lot of people are predicting this to happen, and for altcoin dominance to fall back down and Bitcoin to take back over. But I'm not so certain. How the Ethereum merge goes here is going to be very revealing. It's going to be very revealing. We have broken out above this. We could hold support on top of it, go into an altcoin run dominated by Ethereum and some smart contract networks post-merge. That's what I would think would be the more likely situation, or otherwise maybe just coming back down to this mid-range. Look, altcoins just took a huge amount of ground against Bitcoin. They just ate up in the crash back in June. They kind of bottomed out on the support, and then they just took up a ton of ground with not a lot of relief. I wouldn't be surprised at all to see just a pullback in altcoin dominance, Bitcoin surging a little bit, and then we climb back and retest these levels for altcoin dominance a little bit after the merge. So unclear so far what's going to be happening there. This orange chart is just the exact same chart. It's inverted. This is Bitcoin dominance. Bitcoin dominance fell through support. Sometimes it's interesting to look at things through the other lens. The question is Bitcoin dominance going to push back up to the top of this range, or is it going to hold below this resistance? Believe it or not, this looks very similar to the oil chart. And not that the two trade all that similarly, but just while we're kind of over here, I'll go over to crude oil just to show you how similar it looks, where crude oil has come down below this support range and is now trying to test back up above it. I could see a situation where oil does stay down. Again, I'm not an oil trader and an oil expert, but we have broken through this resistance. Could this just be a deviation that we pop back up above? Sure, but it could also be a fall down to these other levels. I'm hoping that it's a fall down to $60 to $80. That would be much more tenable for the future and the economy, both retail and business wise, right? We want cheaper oil prices. We don't necessarily, oil prices down here at $15 a barrel. That's not necessarily healthy either, because then oil companies can't stay in business, right? And produce enough to keep those cheap prices. What we want to see for oil is a return to the mean, just a return to this zone, right? Which is what we've just now entered. We've just now entered that zone of historically sustainable energy prices or crude oil prices, and we're trying to stay there. We're trying to stay there. Already, we're seeing these decreases in oil, and this is really important. It's important because this is going to be heavily correlated to CPI, which is measured year over year, right? And we're already expecting decreased CPI numbers, right? Based off of the 9% decrease in the 30-day moving average of oil prices last month, right? As measured from a year prior to that, as measured to against August of the prior year, right? And now we're starting to sustain here in September, the first part of September at least, sustain these lower prices and even sustain the downtrend. So as long as we sustain that downtrend, expect CPI numbers to start drifting back downwards. Raoul Pal thinks they may even go negative in the next 5 to 6 months. This big pump in crypto that we've seen, right, has been heavily orchestrated by or helped out by the fact that DXY has come down quite a bit. We were getting this this bearish wedge pattern, bearish ascending wedge. It's more clear if I go to the 4-hour chart, right? This bearish ascending wedge moving into the CPI data, moving in, which is the same day as the Ethereum merged. So expect some volatility leading up until then, and through the 13th. But we fell out of this bearish ascending wedge. This is kind of what gave us the tip off for looking for a bounce, or it was one of the variables we were considering that was indicating that we could fall, or that we could bounce in crypto and fall in DXY. We had this bearish RSI divergence, where RSI, the strength. So RSI is a great momentum indicator. To understand it, you don't need to understand the calculations. All you need to understand is it's just simply measuring the strength of the buyers and the sellers. So when RSI is peaking up here, it means a lot of buyers are coming in, right? Now over here, price was actually higher, or DXY was higher than it was over here, but there were fewer buyers, or the buyers weren't as strong. That's called bearish divergence, and oftentimes leads to a pullback. At the exact same time that DXY candle was printing, or DXY bearish divergence was printing, we had bullish divergence over here on the Bitcoin chart. So Bitcoin was falling in price, even though the strength of the buyers were increasing, right? Which ultimately leads to, or potentially leads to a big spike upwards in price, right? So a lot of this uncertainty in the market lately has been leading to people wanting to get out of risk on assets and hedge a little bit. However, the charts have been saying, hey, this is underpriced. Bitcoin doesn't really belong down here. It's entering a demand zone, right? And prices should be getting bought back up, right? We should be starting to see buyers come in. Simultaneously, right? Not only did we have this demand zone, and this is kind of the second to last chart I'll go over ETH in just a second. Right, we had that demand zone. We also had the shorts that had to leave. Right, the shorts had to leave, and I'll show you by dragging this margin pressure level tool over to our most recent high. Right, what this tells us, this red line shows us, is this 3x short level shows us that as soon as price drops below $18,900, you can't short Bitcoin on 3x leverage anymore and hide your liquidation point above that local high, which essentially means that it's disincentivized. You're disincentivized to short Bitcoin. Meanwhile, we're moving into a zone where buying strength is increasing. We've seen historical demand, and on top of that, we had kind of this bearish ascending wedge pattern printing. And we ended up breaking out of this, bullish descending wedge, the opposite of what we were seeing on DXY. This is a bullish descending wedge, which was a pattern that again indicated that we'd see some sort of breakout. Now, the last chart that I do want to show you guys is the Ethereum chart. The margin pressure levels on this have been super accurate recently. Right. If we adjust to this nice local low over here, and we bring our I've got these backwards. We adjust this to our last high, and we bring our long levels to our local low. We see we did get a deviation, one deviation and then another small deviation below this level. But this has been the level where the buyers are coming in. Historically, the buyers are coming in and the sellers are leaving. Right. So I wouldn't be surprised. I would not be surprised one bit if before September 13th, before the merge, we get some last minute sell pressure, some last minute hedging that brings us back down to this level of 1,500 one last time. I don't think it's guaranteed. I don't think it's even, super likely, but I could see it happening. I think some people are going to get afraid right before the Ethereum merge, cold feet, and we could get one more chance to buy this support level before the merge, $1,500. Now, all bets are off if the merge doesn't go as planned, and there's no guarantee that we're only going up from here, but we are seeing bullish patterns. We are seeing bullish patterns that would indicate that we should be hopefully moving upwards from here, right? So our big resistance still for Ethereum does remain at $2,000. And we also are currently, as we speak, battling this 21-week simple moving average, this purple dashed line that historically, at least for this year, has been a bearish signal or has been a good time to de-risk, right? So we've got that coming in and cutting in at $1,800, all coinciding with this merge date here. We're going to get some price action in this range, obviously, and right now, I don't really want to be trading this. I just want to be standing by. I'm long Ethereum for the long term, next 6 to 18 months. But I'm not going to get too concerned. If it drops, maybe I'll get one last buy-in at $1,500. And otherwise, I'm just waiting to see how this shakes out. We've got a lot of resistance above us. We've got a lot of support below us. The price of Ethereum right now makes a lot of sense given the situation. But post-merge, I do expect it to rally significantly. And we'll just have to see how it plays out. It's going to be exciting.
Exciting, like a roller coaster. Hopefully, go up. Now, speaking about Ethereum, with all the layer twos, is there one where either you think will benefit the most, or will kind of just take off, or is there one you feel like no one's really talking about as far as a layer two on Ethereum that you think should get a little more love?
Yeah, so the three big ones that I'm aware of really are Optimism, Arbitrum, and Polygon. Polygon's been crushing it lately. Price does reflect that. It has bounced up quite a bit. So I'm not saying go all in on Polygon at 80, 90 cents. I do expect Polygon to continue to do well over the future. But it's it's sitting around its 21-week simple moving average. It's not like an amazing buy it right now opportunity. Optimism was briefly overvalued. I think it's come down to a more reasonable value lately. But again, I feel comfortable just holding Ethereum. I don't feel like I need to own Optimism. The big one that doesn't have a token yet is Arbitrum. And there's a strong chance, I believe they have announced that they'll do an airdrop, but there's a strong chance you can get that airdrop just by messing around with some DeFi protocols that have been built on Arbitrum. GMX is a big one. It's a big decentralized derivatives exchange that's doing really, really well right now on Arbitrum. So that's, potentially free money if you qualify for that airdrop, and then we'll see where it comes out when it's valued. But, they're probably going to be doing this airdrop sometime, post-merge, and we'll see. It could spark a narrative, and we could see a lot of value in DeFi move over to Arbitrum. We're already starting to see it. Arbitrum, for reference, has 1 to 2 cent transaction fees on ETH, which is considerably lower than the 10 to 15 cents that we see on Optimism and Polygon. Sometimes Polygon can even be a little bit more expensive than that. So right now they're dominating the scalability and the low transaction fee narrative.
What's your thoughts when it comes to Ethereum Classic? And, I look at Ethereum Classic, obviously, I don't think it really has much future, but in the short term, I think it's a hedge against some hiccups or setbacks when it comes to the ETH merge, almost like an insurance, because if there was any issues, I'd assume that ETH Classic would rally. And then also you have all of the miners that are unplugging. I mean, millions of graphics cards are going to have to go somewhere. And there's interoperability issues when it comes to certain proof of work projects out there. So you can't just unplug your graphics cards and go mine something else. I mean, there's a list of them, but I think Ethereum Classic might be at the top of the list. And I don't know. I think where you see increase in hash rate, traditionally you've also seen an increase in the valuation and the price, just because there's more people using the network and tokens are moving around. do you put any value into Ethereum Classic in the short term, or do you think that's just something probably just stay away from just because of what it is?
I tend to stay away from it. It doesn't fit my investment thesis. Obviously, it was a really nice pickup if you got in ahead of time before it started pumping and we started to see that narrative emerge. It would have been, very forward thinking. Now, I look at, more so it rather than, valuing where the miners are potentially looking to go. I like to look at where the developers are going, and I just don't see a lot of developers in projects wanting to develop on Ethereum Classic. Now, maybe we're wrong. Maybe the Ethereum, or maybe I'm wrong, and the Ethereum merge doesn't go according to plan. And a lot of projects have to jump ship and start developing on Ethereum Classic or ETH POW, whatever ends up being bigger. We'll see. I don't know, but I personally don't feel like the risk to reward is there, especially if the Ethereum merge goes really well. I would expect Ethereum Classic to maybe even do poorly based on proof of stake doing well. And I do think it's more likely that we see a successful merge personally. So fun to trade, definitely volatile, but I don't necessarily I don't even know if I see it as a hedge. Yes, it could pump, but if the Ethereum merge goes really wrong and a bunch of people lose a lot of money and we see like a Terra Luna type collapse, then the best hedge is probably the dollar, to be honest, unfortunately. So hopefully we don't see that.
The dirty dollar. Dirty dollar, dirty Gary Gensler. All right, Forrest. So we kind of briefly talked about this when we were down in Atlanta. You were talking about expanding the Cryptostackers brand. And I saw on YouTube, there was a Cryptostackers. There's 2 channels now. Do you want to kind of talk a little bit about that?
So we're starting the Cryptostackers Syndicate. So essentially, it's just shared or unified branding to help content creators that fit the Cryptostackers brand and have brand alignment. Allow them to basically have a little bit of a jumpstart, an edge, benefit from the existing Cryptostackers audience, community, and branding. So there is a YouTube channel called Cryptostackers William, who is has been a very dedicated member of the Cryptostackers community for a long period of time. He's, we call in the Discord, he has the role of Cryptostackerstician, which is a mouthful, but he knows quite a bit about the bond market. He's been very, very studious and involved in crypto. And he's a very smart individual, and he's been putting out, or he's started to put out videos on YouTube under the Cryptostackers umbrella. There's, to be completely transparent, there's no shared revenue or anything like that. It's not like a contract agreement or anything. It's just unified branding. It's just, he's a really smart analyst. I think he fits the Cryptostackers branding really well. He can benefit from that. And then obviously the videos that he puts out are high quality. So that benefits me and the rest of the Cryptostackers branding and family as well. So I think it's just a win-win-win situation.
Yeah, and I actually have a YouTube page pulled up here. So Cryptostackers Williams got 121 subs. You know how long it took us for us to get to 121 subscribers? He just launched this, maybe a few days ago or a week ago?
6 days ago. 6 days ago.
Damn it, Robin. What were we doing wrong here?
Yeah.
So, guys, William is part of the Cryptostackers family, which means he's part of the Sin City family. Let's show him some love. Go subscribe to his channel. His video was really good, man. He's very well spoken, very smart. The content flowed really good. So we subscribe, and we urge our community to go support Forrest, Cryptostackers, support Sin City, and go subscribe to William on Cryptostackers on YouTube. So I'm excited, man. Anyone else you got? Because I'm assuming it's going to be multiple people, right? This isn't going to be the only person?
It won't be the only person. No, we'll have additional people. Can't say anything yet, but excited to see where it goes. I'm sorry, what was that?
Any hints?
Oh, any hints? No, unfortunately, I can't.
All right.
Can't give any hints. But
leave it alone.
Yeah, there's several people in the community too, the Cryptostackers community, that have just been so involved in crypto over the last 2 years that they've learned so much that they now know so much, and they could share that with the community as well. So that's where William came up through the Cryptostackers Discord and the community, and he's just been so involved in crypto that he's learned so much that he's got so much worth sharing with the YouTube audience.
That's amazing. Rob, you got anything else?
That's it, man.
Forrest, thank you so much again for spending Friday afternoon with us. Well, Friday morning on our time. We appreciate your knowledge and you coming on the show. As always, my friend, enjoy your weekend, and we will see you next Friday, same time. Thank you so much, Forrest.
Thanks, guys. Always a pleasure.
Care.
Peace.
Go on.
All right, guys. We're the leaders of this community, and we just ask you, go subscribe to that channel. I want to see that number up to like 170. Let's get it up there.
I love Fridays because I know once Forrest leaves, weekend is coming. Good content and days off. So,
all right.
I mean, what more do you need? Right?
I could have a list, but I would take too long.
Actually, yeah, there's actually no days off.
There's
I'll be video editing and trying to fix network issues over the weekend. We also got somebody new up in the chat. E-R-R-R-R-R. Hola!
Wait, what?
Welcome to Sin City Crypto. I don't know. I don't know. It's E-R-R. I don't know. Is it Is it R? So,
all right, we got some news to talk about.
What we got?
Bitcoin pumps.
Dang.
Shorts get wrecked. It's a source from Crypto Potato. By the way, what is your favorite form of potato, Robin? French fries, scalloped potatoes, mashed potatoes.
Dude, my favorite,
barbecue chicken potatoes. I'm
gonna go with a potato puree, but that needs a protein on the side. You can't.
What kind of protein?
I mean, a steak. You can go. It's versatile. It goes with everything.
What about pizza? It's a joke. It's a joke.
Yeah, I would. If it's a standalone potato, I'm telling you, if I go to a diner or I say like a breakfast place, I'll get the hash browns and I'll have them add onions and mushrooms to it.
That sounds
super fire, bro. I'm telling you, go
and some
to your
sauce?
IHOP or your Denny's or wherever, and ask. I feel like you're a guy that just like this is David. I'm just an assumption here. His breakfast plate comes out. He's got eggs, bacon, some toast, some hash browns, and he just grabs the maple syrup and just pours it over everything. Like he's just like
It wasn't maple syrup. You get confused.
Yeah.
You
ever seen what is it? Elf when he was just
what a good movie that was.
He was putting maple syrup. He's like, so good. Like on the spaghetti. Remember that?
That was disgusting. The marshmallows. That was disgusting. All right.
What were we talking about?
We were talking about Bitcoin pump.
All right. 160 million of Bitcoin shorts get liquidated in the last 24 hours.
Damn.
That is part of 215 million total shorts in the entire markets over the last 24 hours. And the largest single liquidation order was $3.62 million.
You know what this is called?
On OKX. What?
It's called a long squeeze. So used to hearing the short squeeze. Long squeeze.
Thank you, Robin. Speaking of long squeezes, so this is sourced from CoinGlass. This is total liquidations. You can see the open interest is up 6.8%. Also, the 24-hour liquidation volume is at 79%. When we did our afternoon video, I believe it was Monday, Tuesday, or Wednesday, or Thursday. We didn't do one Thursday. But this was up over 300%. We're slightly, or not slightly, we're below that. We're sitting right at 80%. The long to short, you're looking at 52% long, 47% short. And I'm just going to scroll down. And this is, by the way, this is interactive. So this is total liquidations. You can see over the last 24 hours. Now, of course, when I sourced the information from Crypto Potato, obviously it was a few hours ago. So these numbers, it has gotten higher. So now currently $369 million worth of liquidations over the last 24 hours. If I single out Bitcoin, you're looking at 150 million over the last 24 hours. And if I scroll down, you can see on the bottom here. Okay, that's not right. Anyways, a lot of liquidations. And the last thing I want to show is ETH. So 106 million in liquidations. And you can kind of see this histogram chart here. Obviously, looks like about 3 to 4 times the amount of shorts getting liquidated versus longs. And if I hover over here, you can see the actual numbers. So total, 276 million shorts got wrecked versus only 72 million longs. So, Robin, are you surprised? Are you surprised that ETH?
Here's what I noticed yesterday. I was scrolling through YouTube, and everybody's thumbnail was of a crying emoji, and it was the crypto market is done. Anyways, it was all negative. And when I see that every YouTuber out there, every person that creates content for crypto, all are sharing the same narrative, you know what's happening. The retail is positioning themselves in leverage. And so they're leverage trading. And so what's happening? All those people are looking at these videos. They're like, oh, yeah, the market's about to go further down, about to go further down, about to go further down. They put their positions in, and then boom, everything gets liquidated. Price starts to, in the same thing, you have cascading liquidations. That also happens to the upside. So as short positions get liquidated, you're increasing the price, and price go up. There you go.
So this is kind of piggybacking off of what the last article was talking about. ETH futures officially have overtaken Bitcoin. The source from Crypto News. ETH futures volume hit over $1 trillion in the month of August versus only $941 billion for Bitcoin in the same time frame. Now, this is a sign of more liquidity and more people wanting to get into the ETH market. Also, ETH and Bitcoin spot markets show more enthusiasm for Ethereum. So, we've seen the dominance of Bitcoin drop as the dominance of Ethereum is going up. Is this the beginning of the flippening, Robin?
Yes.
It is.
Yeah.
That wasn't
the
a very
beginning.
That was not a confident yes.
Well, the reason I say yes is that it's still in the medium future. I don't want to say far future. I don't want to say near future. But I would say by the end of 2023, ETH will flip Bitcoin. I don't think it'll happen this. I don't think it'll happen this year. So from now until December, nope.
Do you think something like a catalyst needs to happen? Whether it's the SEC coming out, because recently the SEC has not said anything about.
I think it's just going to be
a commodity.
It's just going to be more utility, and the community is just going to be more present. We also saw that even during the bull run last year, there was a ton of influx of people using Ethereum and getting into it, and the ecosystem was growing. But it fell short because of the throughput and the transaction cost and the congestion of the network. And so if it was able to process a lot more transactions at, say, under $1 a transaction, I think we might have potentially seen Ethereum flip Bitcoin during the bull market last year. And that's where we saw a lot of people that wanted to play around with DeFi. They wanted to get exposure to altcoins. They wanted to use smart contracts in a way that they could borrow on their crypto. They could do staking, all the things that are great about Ethereum. You saw people piling it into Binance. You saw people piling it into Solana. And I think it wasn't so much because they were interested in those projects. They were just interested in what you could do with Ethereum, but they didn't want to pay the $200 gas fee or go through the congestion. So they were like, hey, let me go to the other options, the cheaper options, the more scalable options. And if we find ourselves in a situation where the optimism and Arbitrum and all of these scaling solutions come out, and you have the roll-ups just straight scaling this thing to absolutely, man.
What I'm excited about?
ESG plus scalability minus gas fees sometime next year, if that comes, Yeah,
Selling pressure.
inflationary, and then you got to have a lot of people locking up Ethereum too. Once it's live, the merge is live, and people are comfortable with it. It's not so much of a stigma of like locking up your crypto, not knowing when you get it out. Well, now you have an actual time window.
Here's the thing, guys. There was a bank in Switzerland, the SEBA Bank. They started opening up channels for institutions and accredited investors to be able to stake Ethereum to become validators. And you're going to see more and more of that. So some of these enterprises, large businesses who are thinking about getting into either the blockchain space or trying to invest in Ethereum.
How many people want to stake Ethereum, but they just don't feel comfortable staking on a testnet, right? I mean, me personally, I wouldn't stake on a testnet. I mean, I know there's more potential there and more risk, whatever. You can make a case for it, but I just say, me personally, I'm not gonna stake on a testnet. Nope. But after the merge, say 6 months from now, I'm sitting on a bunch of Ethereum. I'm gonna stake it on the mainnet. I'm not gonna go through some third party. We've seen what happens there.
Let me shoot a scenario to you. Okay, so can you agree that right now Bitcoin is not a hedge against inflation?
Huh?
In your mind, right now,
it's the strongest.
Okay, no, just overall
out of the crypto.
Out of everything, traditional markets, bonds, anything. Bitcoin right now is not a hedge against inflation.
I don't understand. Why would you say that?
Just answer
okay,
the
no,
question.
I'm just saying, okay, if you're going to say a hedge against inflation, that means if I hold in the long term, if I hold dollars or hold Bitcoin, which one will be worth more? Obviously, the answer is Bitcoin.
Okay. The narrative of Bitcoin is a hedge against inflation. Okay, just like gold is.
Okay, but here's the thing. If you're asking me the question, I ask you a question. Would you rather hold $10,000 in cash for 5 years or $10,000 in Bitcoin for 5 years?
We're talking about in the moment.
This is literally the definition of inflation.
But it's not a time frame. We're talking about inflation. So inflation's high
give me
right
a time
now.
frame. Give me 5 years, 5
right now,
months.
inflation's high. Is Bitcoin right now an inflation hedge? Right now.
Are you trying to protect against inflation in 3 months, 3 days,
just
5 years?
Right now.
But what I'm saying is, it's about inflation is a time horizon. Inflation, the percentage is the cost of $1 today versus last year. That is 7.5% is going to be the expected rate. That is from last year till this year. That is the inflation. So if you're going to say protect against inflation, what time period? It's it. It's like that's like saying like what's the score? Who's gonna what's the score of a football game? Give me at a certain quarter. Be like,
1 year.
Which quarter?
Okay, 1 year.
At 1 year, then Bitcoin.
So Bitcoin's a hedge against inflation.
Yes.
I believe the larger narrative right now is that Bitcoin is not a hedge against inflation.
So you're saying that in 1 year, you're better off holding $10,000 in cash than in Bitcoin?
I'm just saying.
That's
we're
the
talking
question.
about narrative, okay? Narrative is what drives people
The narrative
investing.
is what will hold more. Inflation is what holds more.
Do the masses see Bitcoin as an inflation hedge and store of value like gold? No. So what I'm trying to get to is when ETH does flip Bitcoin because it's got more utility and now it's more, climate friendly, whatnot. When Bitcoin does achieve that status where people during times of recession, during times of high inflation, will flock into Bitcoin, flood Bitcoin with all their money. When that time comes, if that time comes, can Bitcoin reflip ETH?
I don't know what your question.
Okay, Robin's a little slow today. Okay,
okay. You're saying Ethereum flips Bitcoin.
I don't understand why that question is so difficult. ETH, we all agree. Okay. ETH will flip Bitcoin because it's got.
We don't all agree. Okay. Me and you might agree.
Okay, we all in this room in the studio agree.
I don't know.
ETH will flip Bitcoin.
Rocco, do you agree? ETH will flip
Yes,
Bitcoin.
he does.
No, I agree. It's okay.
I'm just curious what his stance are.
Because we've talked about this. Okay,
I haven't.
So ETH will flip because it's becoming more energy efficient. Blah 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 blah. Right, and Bitcoin is just not there yet.
I think it might be very hard pressed to flip. I think it'll flip, but it wouldn't surprise me in the slightest. And if nation states, as I said, start putting their treasury assets into Bitcoin,
why not put it in Ethereum?
because it's a utility. They're gonna store of values, treasury assets are in what consider like hard commodities. So gold, silver, platinum, oil, things of that nature. You don't see now. Nations will hold other currencies, for example. It's not against rule of thumb to for like say Brazil to hold the euro, for example. That is somewhat common, but in proportion to commodities, hard commodities like gold, that's kind of like the standard. And so I think if nations do start acquiring cryptocurrency for treasury assets to preserve value and preserve wealth, they'll do Bitcoin because it's more of a store of value and not a utility. They don't want a currency, or they don't want equities. The same way that you're not going to see a nation use their treasury assets and buy Tesla stock, for example. It's just generally treasury assets are reserved for hard commodities.
I think ETH has a chance to add to its narrative a store of value. On top of that, you can hold it as a store of value. You can stake on the network to secure it.
As anything grows in value, if it outpaces inflation, then it's a store of value. I mean, you could say Tesla stock is a good store of value because it's going to outpace the same amount of money over a certain period of time. So if you say, hey, over 5 years, is it better to hold $10,000 or $10,000 worth of Tesla stock? I think it's probably a better hedge against inflation to hold the equities in Tesla versus in just hard cash. And so to make an argument that it is something an inflation hedge, is it going to outperform the dollar is pretty much the answer there. If you think yes, do you think do I think that Netflix is a good inflation hedge in a 5-year window? I actually think no. I think the Netflix business model is getting replaced. I think Bed Bath & Beyond is a good investment against inflation hedge. No, because I think they're going to follow what these other big retailers is going on, and you see that collapse. Same thing with movie theaters, GameStop. So projecting forward, does it outperform the dollar? Can you make money on it? And that's an inflation hedge.
All right. I think ETH's got a shot at adding to its narrative being a store of value. On top of that, you'll be able to hold. You're holding the currency, Ether. You'll be able to validate, secure the network, make money that way. You'll be able to use it for utilities because we all agree now that Ethereum is going to be proof of stake, it will have a lead on institutional adoption on a mass level. So it's got a shot. A lot of people are talking about the Queen. And so the next topic of conversation we're going to the EU. And the EU is leveraging NFTs to fight counterfeiting. Source from Bitcoin.com. They're going to be using blockchain and NFTs to fight against counterfeiting of physical goods. IP holders will create NFTs for proof of authenticity, which then consumers can use to track items through the supply chain to validate their authenticity. This is expected to go live end of year 2023. Kind of sounds like a mix of NFTs and what VeChain likes to do. Does this have a shot? Is this a good idea? Is this a bad idea? What do you think?
I think this is inevitable. And we see it in the luxury brands, or we're starting to see buzz around the luxury brands, like authenticating Rolexes and handbags and high-end items that are typically counterfeited. Just think of whatever you see on the streets over there in New York at the little stands. Those items are heavily counterfeited. And, at face value, when you're looking at it, just looking at the materials, you might be fooled. But you can't fool the blockchain and NFT unless you duplicate the wallet address. But I'm sure there's ways around that as well. But I think this is a good way to go, man. I mean, that's what NFTs are built for.
Non-fungible.
Yeah, so that way it can't be copied and manipulated. And if you find a way to put it, so here's the thing: if let's just say I NFT'd this badass thumbs up sign, and then I were to sell it, you could follow its path. You could follow where it goes. So if I sell it to David, David sells it to Rocco. You can see that every stop that it has.
Think about CarMax.
And you can trace it back. So even if you come across an item, you're like, well, it's on the blockchain, but I'm still a little worried. Maybe it's been duplicated or something. You can literally contact each person and be like, hey, you were the last owner, you sold it to this wallet address. I just want to verify that happened. And then that person can be like, yeah, I did. And then from there, you pretty much, you could, just like the blockchain, you can go back further and further and validate that each transaction of that NFT is valid.
And to be able to track it through the supply chain, which who was it bringing it up? It was Daniel.
That is exactly the same thing that they're doing to follow high-end goods as well, or just any goods. I know, I'm a sommelier, I'm a wine guy, and I know that there's a lot of counterfeiting in wine, but there's so many changing hands going from the winery to the consumer, from distributors and wine collectors and restaurants, and it'll move 10, 12 different places, and there's all of those are essential points of failure. And if you have an NFT, if you have that NFT'd on that product, you can go back to each individual step and validate that person actually had it. Or if there's if you find out that it has been messed with or changed, you can investigate yourself, and then who touched it. And then,
well, here's and this kind of just kind of thought about this now, and it might not make total sense as it's coming out of my mouth because I haven't had time to really formulate it in my head. But
is this any different than your normal conversations? There's
some authentic, unique items that are handcrafted, right, by people. Like Rolls Royce is hand built. There's no machines. Like I'm assuming high-end purses or whatever the case may be. And so when you tie these NFTs to the physical items and you track it through the supply chain, as a consumer, when you get it, and if you really enjoy the work of someone, let's just say, I don't know, it's, I don't even know a great example to use, but I'm just saying to those that require a person to make it and you receive it, imagine knowing, hey, this person, their work is phenomenal. This thing's lasted me for a long time, blah, blah, blah. And now with what they're doing in the EU, and tracing it to the supply chain and seeing who created it, you can go back to that person. And I don't know, it's just something that kind of, get the wheels turning in my head a little bit. Something interesting. Speaking of NFTs and the European Union, tokens and NFTs have flooded the market after the death of Queen Elizabeth II, the source from Cointelegraph. There's been over 40 plus new meme tokens, hundreds of new NFTs, which are averaging less than 0.1 ETH. And it's a little fact, the Queen did serve 70 years, and she passed away at the age of 96. I saw a few tokens. I saw Queen Inu, Elizabeth Inu.
Queen Inu?
Queen token. And guess where all these, what's chain all these were launched on? Take a guess.
BNB.
Wow! Round of applause for Robin, guys. Rocco, round of applause for Robin. Robin, Rocco, are you sleeping? Oh, I was like, I don't even see him. So, did you have a cup?
I didn't want to play it.
Did you have a couple of them pulled up, the coins?
I did not. I can take a look at them now.
Anyways, so obviously the tokens, they're cash grabs. We saw with Squid Games, people dumped hundreds of thousands of dollars in and then realized, hey, we can't get our money out because there was something in the contract.
I don't understand. Why is BNB fault? I don't understand it.
Well, they're the scam chain, bro.
I know.
Yeah, they are. They're literally
David
the scam chain.
David is in the camp that it's BNB's fault.
Is it me or they froze? Did we freeze?
No, we're not.
Yeah, David's in the camp that is. Here's the thing. The only reason that people launch on there is because BNB is extremely fast and cheap to use.
Fast, and anyone can literally copy paste code and just throw it in there.
But that's the thing. That's where Ethereum is going to be. You're going to be able to make the same argument with Ethereum and Cardano and any of these other chains here in the future when they do, they do scale. And so 10 years from now, nobody's going to be paying $200 in gas fee. Like that is not going to be anything anybody is going to be okay with. And that's because we're going to have market adoption. There's going to be masses using it. People are going to aggregate to a couple chains. A lot of the smaller ones are going to die off. And yeah, man, I mean, pennies for transactions is going to be a normal thing. And the ease of creating a token yourself, which that's how you create NFTs, is you create you want everyone to create NFTs. You got to make it easy and fast and cheap. And if you want to NFT everything in the world, then not that you need to NFT everything, but if you're going to get a majority of the products that are out there and track them like we were talking about, you're going to need something that's cheap and efficient. And right now, BNB's at the top of the pack. So,
yeah, it's how you use it. I mean,
yeah,
that's up to you. How you want to do it?
Yeah, it's like the internet. The internet's full of scams, but it's not the internet's fault. It's just it's easy to scam people on the internet because you can create accounts hella fast.
Well, some of them are much
It's
easier.
like it's not Twitter's fault. You can't be like Twitter sucks. Well, I mean, you can't say that, but because it's really easy to create an account and it's really easy to scam people because there's a lot of users on there and it's fast and efficient.
So here's what I want you guys to be aware of is when stuff like this happens, scammers, people are trying to make money, pump and dump schemists will go and they will launch a token to just kind of garner the hype, reel it in, and make money off of it. And here's an example, okay? And what I do, and this goes to any new token that launches. And if you want to see if it's actually, if you want to kind of narrow it down to where is this legit or is this fall in line with a pump and dump or a rug pull, here's one step you can do. So what I do is, so here there was one I clicked on. It was Elizabeth II on the BNB chain. So what I do is I go down here, go ahead and copy the wallet address. Sorry, the contract address. Then go to, depending on what chain it is, if it's ETH, are we showing my laptop, by the way?
Yeah.
Perfect. If it's ETH, you go to etherscan.io. This is obviously Binance, so we do bscscan.com and just paste it in there. And you can see the type of liquidity in the contract. You can see in the contract, there is 0 BNB. So whenever you launch a token, you have to put up, let's just say you launch on BNB, you have to put up BNB tokens as liquidity because people have to be able to cash out. The less collateral they put up, the more zeros you're going to see in the token price. So when you see a token with 15 zeros, you shouldn't look at that as an opportunity. Oh my God, I can 7,000x my money. Look at it as, hey, these founders put up like no money. Now
you can also create when in the contract, when you create the token, you can set the decimal valuation. I went through the whole process of creating a token on BNB.
Did?
I didn't actually launch it. Yeah. So in the contract, you can put as many decimal points as you want. Same reason, like there's a ton of money behind SHIB, but it's got a ton of zeros and some other projects.
Everything I've read, and obviously I haven't gone through the process.
But when you write the contract in the code, there's like a parameters where you can add the decimal points.
Interesting. Everything I've researched said whatever liquidity you provide on the back end is kind of what they set the price at. But if you've gone through it, obviously the liquidity is they have to provide the liquidity. Without liquidity, you can't sell it. So if you pull the liquidity, it's unsellable. Yeah, and you can see the transactions as well, where this is going. This is how people find out whether money's being siphoned out of liquidity and into founders' wallets. But anyway, something I use. So before you do that, something I would recommend doing. Just look at this number, especially if it's not listed on any centralized exchanges. If it's just peer-to-peer, if it's just on DEXs, look at this balance in the contract. You're going to want to see that number up there. All right. That's all I got. Anything else? That's it. I'm drawing a blank. All right, Rocco.
Yes, let's remind about Discord and all the other stuff.
Robin, why don't you do that this time? Remind everyone about all the social media, the Discords, this and that. Go ahead.
Well, everybody, we have a Discord. We got social media. We have a Twitter account, Sin City Crypto 1 at whatever handle thing that is. I'm not a social media guy. Why are you putting this on me, bro? We got a link tree or tree link or tree city program, whatever it is. Go check that out. Follow
man. This is a good week.
Cryptostackers and Forrest is the man.
You know, just to
Friends of family, family of family, and friends of
right, you can stop.
my friends.
You can stop.
What's up?
You can stop.
You started with the Ola. You brought this on yourself.
Yeah.
You know, we launched this channel. Rob and I were talking about this. We launched this channel a year. So it's been a little over a year since we launched the channel. Obviously, the first few months.
A year and 2 days.
Yeah. First few months, working out the kinks. None of us knew anything about audio, video, software, nothing.
I still don't.
That's why
I know more. I know more than I did then, but I still don't.
And we were streaming randomly. And then we finally, when we did our official launch and we did the name change, by the way, if you didn't know, we used to be DR Crypto and now we are Sin City Crypto. But we finally got into a groove. And of course, right in the middle of a bear market. And, you know, we look at our analytics all the time. And over the last 2 days, we haven't grown any subscribers. We actually lost a few. And I was just telling Robin, I was like, all this time and research we're putting in, really not making any money. The markets are down, portfolios are down. And on top of that, the channel is not growing. And it gets kind of hard to zoom out. Sometimes when you're so tunnel vision into achieving a goal, it's so hard to zoom out and see how far you've come, because in the moment you're like, I'm putting all this work in, not really making any money. Like, and it's not this thing
really. Yeah, we're not making any.
Yeah, we're not making money.
Really?
And this thing is going backwards, and it's very frustrating.
We're not going backwards.
Yeah, we've literally lost.
We lost two.
More subscribers than
we
we've
lost
gained.
2 days ago and gained 4 today.
We did not gain 4 today. Unless,
we're
unless you
at
saw some.
277. Are you all butthurt?
It's 276.
277.
You know,
2, 5,
Rocco, take
7,
it. You know, here. Let me.
Really?
What I'm trying to say is, when you're passionate about something, don't look at the short term metrics. Don't look at what's happening in the short term. Remember your vision and what you always wanted to do. Why is it double me? What you always wanted to do and your end goal, and don't let little hiccups here and there kind of discourage you. And what kind of brings me back to center is doing the show and seeing our community, and you guys keep coming back. So what I'm trying to say is keep coming back. And on that note,
wow, there we go. So they're beautiful.
You'll never get anything like that from Robin. Okay. So every once in a while, I am more of a sentimental person than Robin is, and so I like to connect with my people. Robin doesn't give a shit. So, but I will be here for you.
Now, here I look at the charts. I look at the charts, and just like Bitcoin, if we dip down 3 subscribers one day, we're good, bro. We're zoom out, bro.
And this is why we argue all the time, because Robin always misses my entire point. On that note, Rocco, roll the outro music.
Hold on. First episode.
Oh, God.
DR Crypto coming at you from Sin City. My name's David. That's Robin. We're here to talk crypto.
Let's talk crypto. Welcome to the show, guys. First ever episode.
First episode.
Yeah, well.
So
save this, okay? Save it. We're going to go back to it.
Well,
what a terrible background.
Dedicated viewers in the future.
No, in the same way, doesn't want to give you the chair.
Come back and
watch swing it around.
Episode and see what.
Look at him. He can't stand still.
I can't even hear myself, bro.
Wow, that's
that microphone was terrible.
Like,
look at that microphone.
Do we still have that microphone?
I think I bought that thing at Best Buy for like
really
50 bucks.
Who
are we? Who are you, David?
Who are you?
Who are you? A couple dudes, man.
Good question. No idea.
Couple dudes. We love crypto.
That's it.
We love just crypto's where it's at, man.
We love barbecue chicken. This is before my barbecue chicken pizza rave.
My God.
YouTube shows, man. It's all the same narrative. You know, we actually don't sound very different. We just sit here like, talk about
draw triangles, pull up,
agitated, YouTube crap.
That's definitely not what we want to do here.
That was pretty bad.
The idea of our channel.
You know what?
I kept doing this thing with my lip. It was weird. I was like,
fun way.
You still do it.
It's enough for you to death.
Our first camera was our iPhones, so we had a webcam and an iPhone. So
those are the days. Look how far we've come. Look how much further we have to go. All right, rock and roll the outro music.
And that's from my